I want to dive into what has happened August of 2025 versus August of 2024, so we get that bird's eye view of what the market is doing. Okay, so here we are. This is the month over month review so that we can see the trend of where the market's going. And then we can make decisions based on that and kind of expectations about where things are going. Is it a buyer's market? Is it a seller's market? What is going on? Let's dive in. So the number of new listings in August of 2025 versus August of 2024 was down 2%. You can see it was 1,096 in 2025. 1,018 or 1,118 in 2024. So a difference about 22 properties. So it's only about 2%. But the important thing is we've been seeing a trend where the inventory has been higher than it was in the previous year. So this one kind of slowed down a little bit. So what does that mean? Let's keep on looking. Number of sales. 2025 was 1038. 2024, 1,041. Now, what's interesting about this is sales were flat, but inventory was down a little bit. So even though inventory or supply went down, demand was still here. That creates a little bit of a gap, so that shows that that seller's market is still hanging in there. We're not moving into a buyer's market. At least that's not where we're trending towards. Days on market. Now, what we are trending towards is we're seeing that properties are staying on the market longer, which I mentioned on the market snapshot for this week. You can see August of 2025, 25 days on market versus August of 2024 was 19 days on market. So that's a significant increase. Properties are taking a little bit longer to sell, but they're still going at that asking price or above. Months of inventory. So this is our absorption rate. This is one of the best indicators of, are we in a seller's market? Are we in a buyer's market? Where are we trending towards? So what this means is if you took the current amount of inventory that was on the market and the current rate at which they were selling, how many months would it take for all of the properties to sell and be gone? A normal market is generally accepted to be somewhere between 5 and 6 months of inventory. A seller's market is anything below that 5 months of inventory. A buyer's market is anything above that 6 months of inventory. So you can see for August of 2025, we were at 3 months of inventory. It is a softer seller's market than it was August of 2024 because we were at 2 months inventory, but it's still a seller's market. And the reason I keep mentioning it's still a seller's market is because that indicates that prices will not be softening anytime soon. They are not trending toward softening, and they will likely not be softening anytime soon. Now, if we look at median sales price, this backs up what I was just saying. You can see that in August of 2024, August median sales price was $741,000. August of 2025 was $760,000. So it's up 2.5%. Versus August of 2024. So the property values are still increasing. For those of you who are sitting back and kind of waiting for a big crash, I want to show you this graph. And I've showed this to you before, but I just kind of want to run through it again. This is the last, since 1942, that's what, 81 years. How many years were down, how many years were up, how many years was there a loss, neutral, and so on. So since 1940, you can see that there were 73 years that were positive. Now, it might have only been positive 1% or 0.1% or something like that, but the year finished out being positive year over year. There were only 7 years that were negative. Those 7 years were in the 1990s, from 1991 to 1992. That was 1% and 0%. Now, what's important about that, 1% to 0%, if you are waiting for a market crash to happen, and let's say it does drop 1%, it's showing no indication of that, but let's say it does drop 1%. Well, if you've been waiting for even a year and values have gone up 3%, then you've just lost 2% in the delta. So it's something to really keep in mind. So in the 1990s, we were at a loss here. 2000s, this was the Great Recession, 5% in 2007, 2008, 2009, 2010, and 2011. So that was a significant drop in property values. But that drop, that Great Recession, was caused by the real estate industry. It was caused by subprime lending and all the things that were going on at that time. Since that drop, there have been numerous safety protocols put into place where all of these properties that have sold since then have equity. They are legitimate buyers. and it's not the same mechanics as it was back then. So the whole point in showing you this is, if you are sitting here and you're waiting for values to drop, the odds of history are not in your favor. Now, nobody can predict the future. I'm not sitting here and telling you that prices are not going to come down. I'm just telling you that the trends of what the market is doing, prices are still trending up, not at 10 to 15% like they were during COVID, but they're still trending up. History says that trying to time the market and look for a crash to buy a property is not very much in your favor. And what ends up happening is I see a lot of buyers that are sitting and waiting. For example, there are a lot of buyers right now that are sitting and waiting for interest rates to come down. Well, they're starting to come down. As soon as those interest rates start coming down so that people can save a little bit on their mortgage, there's going to be bidding wars on properties, so they're going to pay more for the properties. So the saying is the best time to get in real estate was always 10 years ago. Now the second best time to get in real estate is today. And it's time in the market, it's not timing the market. So if you're considering buying, I would consider doing it sooner rather than later, just so you're not getting into those bidding wars should they come when interest rates start coming down. Hope that makes sense. If you have any questions, any disagreements, any comments, please let me know. I'm happy to review articles that you guys see that say things that I'm not saying or say things against what I'm saying. Kelly and I gladly look at these articles. We'll run the numbers. We'll see what we may be missing. But based on what I am seeing, the market still appears strong, especially here in the DMV area. This is not nationwide. This is the DMV area. The market still feels strong, and it's still a great time to enter into the real estate market. Give us a call if you have any questions, 703-783-2143, and we will see you guys next time.